Good morning, friends. At the very outset, I would extend my best wishes to you all and all the viewers. Very happy and prosperous New Year to you all. Stay safe, stay blessed, stay wonderful. So have a nice year. Forget the terrific pandemic year, but don't forget to use a mask and washing your hands and face in every hour with beautiful soap. Better use soap rather than sanitizer only. Okay, so now I am again with you. This is my first class in the new year 2021, and it is class number 24th on accounting. The two parts I will take up today. One is account and its classifications, and after that journal and its classification. So these are the two topics that I would complete today. Now friends, so far as recapping is concerned, I think you might have forgotten some parts. What I have already done is because you have passed your Christmas days, your Christmas week, your New Year celebration. Although it was a controlled celebration, but it was a celebration. There were celebrations. Okay. Now I am recapping. I started accounting in my inaugural class. There I have told accounting is a process of the preparation of the statement of events, and gradually I have told you it is a statement of financial events. Wow. Accounting is the process of the preparation of financial events, financial transactions or financial events, and the ultimate account we have prepared. Those are final accounts. Final accounts are the accounts which are prepared in order to get the results of the transactions taking place during the particular year concerned. And we also prepare another statement. It may be also regarding account, and that is statement of affairs or balance sheet, where we record assets and liabilities. And while preparing our final account, we started with the transactions. So our first task was to have the transaction. So events are taking place, and the events are categorized: financial, non-financial transactions, non-transactions. Transactions are taken into account for getting for their own treatments. What are the treatments? The transactions are recorded first in the book, and that is known as journal. What is journal? I have told you again. I will repeat it a few minutes back. And then ledger. From ledger we prepare trial balance. Okay. And from trial balance we prepare final accounts, and then balance sheet. Clear? Now come to this part. Each and every transaction has got two aspects. These two aspects are technically called debit aspects and credit aspects. So what? So as soon as and when the transaction takes place, we should find out what are debits, what are credits. What are the rules of debiting and crediting? You know, all assets are debit, all liabilities are credit. What comes in debit, what goes out credit. All expenses and losses are debit, all gains and incomes are credit. So this is okay. Now after making debits and credits, after finding out the debits and credit, what do? We record it in the book of journal. Okay, in the journal, so we make the entries. Okay, we start the process of journalizing. Okay, after journalization, the accounts are recorded in ledger. The ledger has got three dimensions. One is posting, that is from journal to ledger account, and there we make the totaling. Okay, that is casting, and after that we prepare the balances. We get the balances, and with the help of the balances, all the debit balance and credit balances, we prepare a statement. Just debit in one side, credit on the other side, all the debits in one side, all the credits on the other side, and we get the summarized statement of account, and that is known as trial balance. If the trial balance is agreed, and obviously the both sides of the trial balance must agree. As we know, every debit must have its corresponding credit, so every balance of debit must have the balance of credit equal. Okay, so there is equality in both the balances, debit balances of all items and credit balance of all the items. Thereby we get the trial balance. Okay. Now if you scan the trial balance, you will get a good number of accounts. purchase account, sales account, closing stock, sorry, opening stock, then rent, electricity, depreciation, furniture, cash, bank, goodwill, and many other. So you have gone through, because we have completed a good part of that, and we have got a huge number of accounts. These accounts are classified into 3 parts. Okay, basically 2 parts, and the accounts the total account is shortly we write AC account. Okay, the account is classified into 2 parts. One is personal account, the account which are related to the persons, they are known as personal account, and the accounts which are not related to the persons, they are known as impersonal account. Personal accounts refers to the name of the person, and the totality they are known as sundry. You have purchased goods on credit from Ram, so purchase account debit to Ram. The purchase is a nominal account. Sorry, now again I am letting you another. So there is, other than the personal account, there are other accounts, that is impersonal account. Impersonal accounts are the accounts which are not related to a particular person, which are related to those who are non-persons. Okay, and that is, they are divided into 2 parts. One is real account and the other one is nominal account. Real account is the account of the assets. And nominal accounts are the account of the expenses, losses, incomes, and gains. Okay. Now I am making the classification. So you have got the accounts are of 2 types. One is personal account and the other one is impersonal account. Personal account is a 2 types: debtors account and creditors account. Creditors account and impersonal account are divided into 2 parts: real account and personal account. Now we are purchasing goods. Okay, purchasing goods for cash. Okay, purchase account debit to cash. Cash is your real account, and if you consider the stock should be regarded as your asset. Okay, stock should be regarded as assets. But when it is used regularly for the sale of the goods, for the purpose of selling, when they are business items, they are treated differently. They are treated as a nominal account. Okay, but because it is the expense of what? Expense incurred for getting the revenue. So matching the cost against revenue, they are treated as the general expense. Clear? And now, say you have purchased goods from Pachu on credit. So purchase account debit to Pachu. Pachu is your debtor. Creditor. So who are creditors? Creditors are the person to whom you have to pay your debt. Okay. So person, they are the part of liability, because liabilities are those which have the claim to us for services, which can claim services from us. Okay. So that now expenses, you have paid salary. Salary is account debit to cash. Salary is your nominal account. Okay, because it is the expense. Clear? So salary is a nominal account, and your cash is your personal your real account is going on. So in that way, the total accounts are classified. So just I am giving you that the factory electricity, office electricity, stationery, printing, all these are the expenses. So all are nominal account. Your cash, furniture fittings, and many others. A good number of things we have already gone through. They are categorized into a real account, and all the creditors, they are your personal account. One important personal account is that whenever someone is asked, capital account is what type of account, people obviously say it is a real account. Why? Because it is not a real account, it is really personal account. Please bear in mind, because whenever someone is starting the business, what he is doing? He is carrying on something. Say he has brought down some assets. Okay, cash 10,000, furniture and fixture 15,000, machinery 20,000, and building 50,000. So this is the items are coming in the business. So all assets are coming. So how much it is? 25, 75, 95. So it is 95%, and it is capital account. And this capital account is the liability to the person who has started the business. So it is capital account is your personal account. Okay, and drawing account again is your personal account. Clear? So that is more or less, friends, the classification of accounts. Clear? So I think this does not need much more much more clarification. Now what do we do? With the help of nominal account, we prepare final accounts. So final accounts are prepared with the help of nominal account. Final accounts are those, in case of trading organization, it is what in case the personal purchase and sale of goods and services, purchase of goods and selling that goods, and that is known as trading organization. Trading organization, they prepare trading account and profit and loss account, and this trading and profit and loss is also the nominal account. It's the final nominal account, because all the accounts are all the nominal accounts are all the nominal accounts are closed under the bigger comprehensive nominal account. Comprehensive nominal account. Now, so this is regarding more or less the preparation of comprehensive nominal account, this final account, and then we prepare another statement that is known as statement of affairs, and that statement of affairs is known as
impersonal.
Yes.
Impersonal.
Oh. Sorry. So when it is some spelling mistake was there, writing mistake was there, and that I have got it rectified. Now, with all the nominal accounts, we prepare the final nominal account, that is the comprehensive nominal account, and that nominal account is known as trading account, trading and profit and loss account in case of trading organization, manufacturing, trading, manufacturing, and final profit and loss account in case of industrial organization. And in case of non-trading concern, the final account is income and expenditure account. They are known as the comprehensive nominal account. And all the nominal accounts are closed. Okay, at the end of the year, it is the master nominal account. Okay, this is known as master nominal account. And all with the help of all other debtors, creditors, and all other assets. Debtors are real assets, and all the with the help of all assets and all the liabilities, all the creditors, we prepare a statement, and that statement is known as balance sheet. Clear? So that is our more or less the classification account and how the accounts are utilized for the purpose of preparation of the original account, which we basically want to prepare, and that is final account and balance sheet. Now, this is first part. Then comes the second part, classification of journal. What is journal? I have already told you repeatedly. As soon as the transaction takes place, you take out a very big book, very fat book, and that book is known as journal. What do you do over there? Each and every day, all the transactions take place all through the day. Okay, say you have started your organization, you have opened your organization at time, and it is closed at around 6 p.m. Now during from 9 to 6, but during these 9 hours, you have effected a good number of transactions. Okay, all the vouchers are ready. Now your accountant starts writing on that book. And that book is known as journal. All the accounts, all the transactions that have taken place during the year are recorded over the book. Okay. And now every day you are going to write this. And then after that from journal, what do? We record it. We record it in the book of final account, book of final entry, that is known as ledger. So that ledger account is a very fat book having a beautiful good number of pages, and each and every transaction has got 2 dimensions. One is debit and the other is credit. So from ledger account journal, the posting in ledger will have to be done by some other one. Okay, in that case there will be problem. Whenever your one accountant is writing the transactions, recording the transactions in the book of private, there is journal. How the other one who is supposed to record it in the ledger, how would they do? So until and unless the first task is completed, second task cannot be started. Clear? So that is, and in that case, it may take 5 hours, 6 hours, 7 hours, 10 hours. In case of the bigger organization, it will require much more time. So, because we cannot, this is only single book of journal entry, single book. From single book we have to record it in the ledger. So that is the problem. Now, how to solve the problem? So a single journal book, a single book journal. What is the problem? The problem is the journal will be very voluminous. The book will be very fat, like cheap to look to copy. Okay, it is the number one problem. And fat book, basically maintenance of fat book is a typical problem. Handling of that is a very typical problem. And again, from journal we have to record it to ledger. So simultaneous ledger posting is not possible. So these are the problem of having a single journal book. Okay, a single journal book is a problem because it's a problem. It gradually become very fat. It will be the problem of handling it and also the problem of recording from journal to ledger. So what do we do? What is the solution? The best solution is to classify them. How do you classify? There are different types of journal books. Okay, there are different types of journal book of journal and book of private entities are maintained by organization because the total journal, the journal is classified under three parts. In books you will get different classification, but friends, I am letting you know there are three classification of journal. Three classifications. First of all, what are the different types of transactions? The transactions are of two types. Okay. Two types of transactions. Transactions are of two types. One is cash journal, cash transaction. Cash transactions refers to transactions where payment of cash is immediately effected. Okay, the direct payment. So you have purchased goods on cash. So where would you write? You would write purchase material in cash. So what is coming in? Goods are coming in. Purchase account debit to cash. Okay. So this is the cash transaction. Now you have purchased goods on credit from Ram. What is happening? Purchase account debit to Ram. Ram is your not personal account. Ram is your personal account and it is not related to cash. Okay. When you will make the payment will be Ram account debit to cash. Clear? So these are the nature. So cash transaction and paid transaction, these are basically. Okay. And again there are two things. One is you may purchase goods in cash or you may purchase goods on purchase some assets in cash. Say you are purchasing a station, a machine for the organization. Machine account debit to cash. Okay, so it is cash transaction. Now you are purchasing a machine from Mr. For any organization, for X organization, X enterprise. What is the journal entry? Machine account debit to X enterprise. So there are different types of things. Okay, so regarding the nature of transactions, we have classified a good number of books, and these books record the primary. Number one, for all cash transactions, we record in the cash book. Okay, for all cash transactions, we record in the cash book. Clear? So cash book, what is cash book? Cash book is that channel where the books or all the cash transactions are primarily recorded. And later I will also let you know that cash book, the formation of cash book is such, it serves both the purpose. It serves the purpose of journal and also ledger, and that I will take up tomorrow. Okay. And then petty cash book. Petty means, as you all know, petty is small, very small, type K4. So you are purchasing a machine for 50,000. What is the journal entry? Machine account debit to cash. Okay. In cash book you are recording. Now you are paying rupees 10 for purchase of some tea. So T account, cash account debit to T account debit to cash. So then you are writing the figure of 50,000. Along with that, you are writing also the figure of 10. So it is some typical. Okay, that is why all the small triple cash transactions, the cash transactions which are very tiny in nature, tiny in terms of money, which is very small amount. For that, we prepare another book, another cash book, and that is known as petty cash book. As the name suggests, petty cash book is a book where all the cash transactions which are very different in nature that are recorded. Okay, so this is cash transactions. Now for credit transactions, For credit transactions, we basically prepare a good number of journal books. Good number of journal, and they that are known as the day books. Day books. Credit journals are known as the day books. Day means daily. Day books. And what we do for every credit, for every cash purchase, what do we record in the cash book? Okay, purchase account debit to cash. For credit purchase, what do we record? Purchase account debit to Mr. Say Panchu, Mr. Khandu, Mr. Rahim, Mr. John, whatever is ready. Then that is credit transaction. Where would we record? We record it in the purchase book. Clear? Listen. Cash purchase, cash book. Credit purchase, purchase book. Okay. Now cash sales. You are getting cash account debit to sales. But whenever you are selling goods to Mr. Sani, what do you do? Sani account debit to sales. Mr. Sani is your personal account. Okay. And it is credit transaction, and that is recorded in the sales day. Clear? And whenever you are purchasing goods, there is every possibility that goods make goods some return. Okay. So you have purchased goods from Mr. Hunsu, purchase account debit to Hunsu. Clear. Now you are returning goods. Okay. So Mr. Hunsu account debit to goods, return outward. Okay. So for that return, we recorded in the return outward. Now again you are selling goods to Sani. Sali account debit to sales. Now Sali is not at all interested to use some goods which you have already delivered. So now Sali is returning. So what that is coming is known as return invoice. Yeah. Then another two books are prepared for bill receivable and bill carry. That I will include later on. Okay. So all these are for credit transactions. Okay. So purchase for all the journal, the daily recording journal which is affected in the transactions which are affected in cash book, and small amount in petty cash book, for all credit items are recorded over there. Now come to the credit purchase. Here in purchase book, sales book, return inward, return outward, we only record those goods purchase and sale, return inward and return outward, of those good things of which we are carrying on the business. Okay. Purchasing goods, purchase account debit to cash. Selling goods, cash account debit to sales. Purchasing goods from some on credit, purchase account debit to Mr. X. Selling goods to Y account debit to sales. All these are our trading item. Okay. But whenever you are purchasing machine in cash, where you are writing machine account debit to cash, and machine account debit to cash, it is written in the cash book. But whenever you are purchasing credit, an asset on credit, say you are purchasing an asset from Mr. Bose. So क्या होगा? Asset maturity account debit to Mr. Bose. Where would you record? It is, you cannot record it in the cash book. Okay, you cannot record it in the purchase book because purchase connotes purchase of goods of which you are carrying on the trade. So it will not come over there. So where would you record? We prepare another set of another book of another journal, and that is known as journal proper. So all the credit purchase of assets are recorded in this book that is known as proper journal or journal proper. Clear? And it's in the same way sales. You are selling goods of what? Of which you are carrying on the business. So you are carrying on the business of jute. You are selling jutes on credit, cash on debit to sales. Now you are selling jute on credit. What is that? Say Mr. Bose account debit to sales. Now sale is your revenue item. A sale and purchase concern the assets revenue in nature of which we are carrying on the trade. But whenever you are selling some furniture on credit, whenever you are purchasing some building account debit to cash, no problem. Whenever you are selling some some furniture on credit, furniture is your asset. Okay. So then what we are doing? Furniture account credit and the personal account debit, and that is known as credit purchase, credit sales of any asset. So that goes under the category of this. Okay, general property. Okay, so this is now there is opening entry. Opening entry means whenever the business starts, and after the every accounting period, on the first day of accounting period, where all the assets are made debited and the liabilities are credited, and the difference is transferred to capital account. So that is known as opening entries. And at the same time, the closing entries are those which we pass for finding out the profits and loss. What is happening? I think you know. Say you are paid wages account debit to cash. They are going to cash or credit, whatever it will be. But at the end of the year, this wages account is transferred to another account. Then what we write? Trading account debit to wages. That is known as closing entry. Okay. Now this closing entry, there is no account. You cannot put it in the journal. You cannot put it in the debits. So you have to put it in a separate document that is known as journal proper. Okay. That is closing entry. Now say I have purchased some furniture. Okay. For our office use. So what should be the journal entry? The journal entry should be this one. No? You have made a purchase of some furniture. Just to take it. Okay. Take it properly. You have purchased some furniture. So what you should write? Furniture account debit to say to Mr. P. Okay. Say 10,000. Okay. You have that should be the journal entry. But you have an accountant like me who does not have the proper knowledge. What have they? Since you have purchased furniture, I have made it purchase. So purchase account debit to P. 10,000. Is it correct? Furniture is your non-trading item. Okay. So any asset which is non-trading in nature should be treated as an asset, and that should be put in the name of in its own name. But whenever say you are trading on June. So whenever you are purchasing June, what you do right? Purchase account debit to cash or credit, whatever you pay. So purchase for trading item or asset name is a non-trading item. What you are doing? You have effected purchase. It should be purchase account debit to P, because you have yes, you have purchased some furniture for the use of the business, so it is your asset. The original account should be furniture account debit to P. But what you have done purchase account debit to P. Is it correct? This part is okay. This part is okay. This part is okay. But this part is not okay. Okay. It should be furniture account debit to P, but you have made purchase account debit to P. Now purchase should be written on. Okay. गलत हो गया था. Okay. इसको क्या करें? Erase कर दे. No, you cannot erase it. So purchase has been debited. Make it credit. Make it credit. 10,000. And furniture account should be furniture account is it is known as rectification entries. Here, the rectification is what do you put? It is not a cash transaction. It is not a petty cash transaction. It is not any credit transaction. It is a transaction only in the books. So it is known as paper transaction. Clear? So all this, whenever you ask the people, all the people will say, what are the different types of transaction? People say transactions are of two types. No friends, transactions are of three types. One is cash transaction, one is credit transaction, and the other one is a paper transaction. In cash transaction exchange immediately, but in credit transaction exchange, one part of exchange comes to me today and later part will be done later on. But there are some issues where no transactions, but they are given the status of the transactions, and that are known as paper transaction. They are regarded as paper transaction, and all the paper transactions are to be put under the head journal proper. I am coming to another problem. Say you are paid wages. These things I have already told you repeatedly in our previous classes. Say you have paid wages of rupees 20,000 this year. Yes. But what is happening at the beginning of the year, you are getting that 5,000 wages is still due. Okay, so wages should be increased. Clear? I have told this expense. So wages should be increased by this amount. Wages account debit 5,000. And say to the outstanding wages. To outstanding wages. What we do in case of white paper in trading account, we write in the debit side of the trading account wages 20,000 and outstanding. We have written down. Clear? And that outstanding we have shown it in the liability side. Clear? Now what is the journal entry? The journal entry is that wages account debit to outstanding wages. Clear? Now, if you prepare a wages account, you see a wages account is wages account debit to cash, 20,000. Sorry. 20,000. But the wages account, which is transferred to the profit and trading and profit and loss account, should be 25,000. Why? Because 5,000 is still due. It is outstanding wages. Clear? And this is known as adjustment entry. Okay. Now, wages account debit to outstanding wages. This is adjustment entry, and this wages is transferred to the profit and loss account. That is known as closing entry. Clear? Now, so these adjustment entries, rectification entries, opening entries, closing entries, purchase of assets and liabilities on credit, for them we have to pass some paper transactions, and these paper transactions are recorded in the book of in this book, this journal book, and that is known as journal proper. Okay, so journal is journal should be categorized into three parts: one for cash transaction, cash book; one for credit transaction, trading transactions, purchase all the day books, purchase, sales, return inward, return outward, bill is always covered, and for all the paper transactions we prepare a separate set of journal, and that is known as journal proper. There we record the entries recorded over there: adjustment entries, opening recognition entries, opening entries, closing entries, and purchase and sale of assets on credit. Okay. So, friends, that is the total thing what I wanted to say you. Okay, so go through all these things, and if you have any queries, let me know in my Insta and Facebook. But you make necessary comments. Most of them are not. Our close students are not making any comments. So let me understand that you realize all things. You have understood the things in full. Okay, clearly, for any queries, make a comment. Okay, and get yourself ready in your house. Please go through the topic carefully. That I will take up for now. Clear? So thank you very much, friend. Have a nice day.